Okay, welcome to the Swing Trading with Cycles channel. We're going to review Facebook today, one of our single stock editions, and we looked at this one before, so this is an update to that video, and you'll definitely take a look at the link in the description for that video if you haven't seen it. And you should see an option in the upper right-hand corner, depending on what platform you're on, to take a look at that video now. So we're not going to go through everything in quite as much detail this time. We're going to just kind of give an update of where we stand, and most importantly, where do we see ourselves for the next few months and really going into 2023. So we'll do a review of the long-term charts. We'll then zoom in on the daily chart to understand potential levels for like a short-term trade and levels to watch. And then we'll go into the ratio charts. This is really important. So understanding, is Facebook underperforming, or is it outperforming or underperforming the index? Because that's how you want to think about investments, just generally speaking, like that, because you could always just invest in the SPY, right, or some other index fund that's even lower cost. And so there's a reason why you would invest in single stocks, and it's only if it would outperform. So we'll look at Meta compared to SPY, the S&P 500 index, and QQQ, and then we'll do the final verdict. So let's jump into the charts. We'll start with let's do the yearly chart. So we'll look at that really quickly. So there it is right there. So this is your annual chart, and we talked about this in the last video, this kind of monster of a bearish candle that took out all of the gains from these previous years, right? And you can see prices still below the low from 2019. So all of those gains completely wiped out. Actually, even low from 2018 as well. And just above the low from 2017. So that's kind of big picture. And in terms of the 2023 outlook, this is important. We only have 1 month left, right? So this is, what is it? The beginning of December. It's December 3rd. So we're like really early, or I should say, we're really late in our year. So things aren't going to change, right? Things are going to change. What I mean is, you're not going to see like a 50, 60, 100% move in December to change this candle much, right? And so right now, this candle has an enormous range. And again, these are yearly candles. So every year here is an entire year of price action. So this big candle here is all of 2022. And that is a high at 343 and a low at 88. That's the recent low we just made. And so that's what I mean. There's no way we're going to rally all the way to 343. So we're not going to get to the highs. Now, is it possible that we could revisit the lows? I think that's what we'll see when we go to like the daily chart, etc. But you can imagine you're essentially going to be, the next candle is going to open inside the range, right? It's going to open inside the range from this year, right? So that's important to just be aware of, right? And so what does that mean when you zoom into the lower time frames, right? So zoom in past the year. So this is your quarterly chart, right? And you can see we had these little doji quarters, 2 quarters, and then we've had 4 pretty dramatic down quarters, right? Where you had a large range, right? Where, so price moved a lot and it moved to the downside, right? Pretty decisive moves lower. Now, this current quarter, so this is the Q4 candle. It's just December is beginning. So this candle is going to close out this month. You can see it has a massive upper wick, and you would probably notice that upper wick from the annual candle, and we're going to get there as we zoom in. We're seeing a rally on the lower time frames, and we're going to talk about what are the levels we need to be watching for this rally, right? But this candle, so this is an important stat to always know. What is the opening price for a given candle? Because once we go above that opening price, we are green, right? Once we are below that opening price, we are red. That's why we're red right now, right? The opening price for this quarter, which was the opening price for October, that's how it worked. The opening price for the first month of the quarter was $137. So you can imagine, and we're sitting here at around 126. That 137 number is going to become important, right? You could see a world where we will test that number at the very least. If we break above it, we'll have to see. And as we zoom into the charts, you'll see how that number becomes important, right? That 137. That's your quarterly high. That would make this candle, or your quarterly open, that would make this red candle turn green. And that's that's what we're on pace for if this rally continues, right? And then our best case scenario, next month, we would get a candle that looks something like this, makes a new high above the low from this candle, or makes a high above the high from this candle, which would make this a nice, beautiful swing low. Now that's the optimistic case, right? Like if things kind of work out, if this rally continues, that's like your bull case, if you will, right? Now, if we look at the monthly charts, right? So we're just zooming in here. You can see the quarter is still red, but what do you notice? These last 2 months have been green. Now it's December 3rd, so very little price action trading in December so far, just 2 days literally. So this is very preliminary, but it is green so far. But more importantly, last month was green. And remember I talked about that swing low on the quarterly? Well, guess what? We have a swing low on the monthly, right? So it's not a quarterly swing low yet, and that's how it works. You get a swing low on a lower time frame, and if it gets followed through, right, and more specifically, if we cross above here, right, that would give us, like, if you think about it, this is the last month of this quarter, right? And so this is the first month of the quarter, and this is the high from this month. So we need to cross above this candle to make a new high on the quarter, which is what we just looked at in that quarterly candle chart, right? Like that idea that like that new candle would cross above this high. So that's what we're looking for. And so like how do we make this kind of more actionable? So before we go on to the daily chart, one thing I want folks to be aware of is you think about the cycle. Like if you think about a cycles-based framework, now first off, this is all about price action. The cycles allow us to quantify the price action. Think of the cycles as just a shorthand for being able to say this rally lasted for this many weeks, this many days, this many months. And so as we look at the weekly chart, let's think about the weekly cycle. So we clearly have a weekly cycle low here, right? And if you're not familiar with cycles, take a look at the links in the description. There's some written content. There are 2 videos, each about 15, actually probably about 30 minutes each. So a ton of content. There's not a lot of content on the internet in general. So I created a lot of it, right? I learned what I needed to, and I've created more. And so this last week was week 4 of a new weekly cycle. How do I know that? Well, this is very, let me just zoom in here. This is very clearly a swing low. Now notice, I already talked about how we have a swing low on the monthly, right? Well, guess what, folks? This is the swing low on the weekly that caused that monthly swing low. That's what I'm talking about with the multiple time frame analysis, right? The idea that, and guess what? This weekly swing low, you guessed it, has a daily swing low behind it, right? That's how it works. You need a swing low on a lower time frame to enable a swing low on a current time frame and make it possible to have one on an even higher time frame. So we have this swing low the week of October 31st, so last week of October. Interestingly, I think that is about the time that I recorded that last video. That's funny. And so we got our swing high, and that's how you can play this, right? Imagine you just set an alert for when you go above this low, right? And so, this high. And that was once we crossed above $99.32, and we're up here at $23. Or 123, so we're already moved 23% since then. But more importantly, this would have been week 1, and then you had this week 2, which was just consolidation at the upper end of the range, and then you had week 3, which was what? Again, just consolidation, right? So there was some tension here, like, is this going to break down or break up? Generally, consolidation resolves in the direction of the move higher, right? And so that is what we got here. Now, this could have broken down for sure, but it did not. So now we just completed week 4. And that means next week would put us at week 5. And so what you want to observe here is that in bullish scenarios, we can rally for many weeks, right? So like this is a rally of, what is that? 34 weeks. Wow. And when I say, I'm talking about a rally from swing low to swing high, right? And so it doesn't mean we're going to get a 34 week rally. But this is what you want to start thinking about, right? That like we've rallied for 4 weeks. Next week starts week 5. Like, are we going to start to peter out? And most importantly, you want to start watching the weekly lows now. So we want to stay above the low from this week, which was $108.38. Now we're up here at 123. So that's not amazing risk reward in terms of putting your stop by any means. But it's like just in terms of like that, like, you could see a world where price wants to go like right here, right? It wants to go get into this zone. You could see this consolidation, like price just oscillated between these levels. And so you can see a world where somewhere around here becomes your top, and you can see this big red candle. We're going to have to contend with that. I think that gets you like the 138 level. That's that level that we talked about that gives you a quarterly swing low. So it's no coincidence. That's how it kind of all works, right? And so that's the context that's important. We're in a new weekly cycle, but if it's a bearish weekly cycle, it's totally possible that this week 4 could have been our high, and we can start a downtrend from here. That's entirely possible, and so that's something that we have to be aware of, like that possibility. Like we could start something like that, right? We could start to make a move lower, and so let's look at the daily chart, because we know we're going to be in week 5 of the weekly cycle. So where are we on the daily cycle? Okay, so let's zoom into the daily cycle. So as I said, again, not to belabor the point, but there's always a swing low on a lower time frame, right? And so that's it. Boom. So this is good news. We haven't done the count yet, but just eyeballing this, we're not super late in the daily cycle. So that's really promising. Why? Because the longer a rally has gone on, the more likely it's going to retrace. That's just a simple fact. And it makes sense. It's intuitive, right? If something has been rallying for a really long time, just based on the way price action moves in higher highs and higher lows, those higher lows are necessary. You would expect a higher low coming soon. And so this has been a nice little move. We consolidated. Now we go up. So you imagine another little higher low and then something like that, right? Now the question is, how many days have we rallied yet so far? So this is day 1, and this is... So Friday was day 19. Okay. So not super long, right? Like that's not super early. Like, now, just for context, right? Like, I obviously much more potential upside if we had caught this on like day 4 or day 5. And you can set alerts to do this. This is all just kind of for illustrative purposes. And we'll talk about kind of the final verdict. The other thing that I would draw one's eye to is this huge gap that we've basically just closed. So these things all spell to me potential pullback coming. Like there's no reason why we couldn't start a little decline after, like this couldn't be our like daily cycle high. Like if we look at some of the other little rallies on the daily chart, and again, cycles just kind of helps you quantify, well, gee, how long do rallies tend to last, right? Like let's say like this little rally, that petered out in 16 days. That little rally only lasted like 4 days, right? This little rally lasted, 10 days, right? This little rally was like 5 days. This one was 10 days. So you're starting to get a little like, wait a second. Rallies tend to peter out around day 10. So that's the other thing. If rallies tend to peter out around day 10, well, we're sitting here at day 19. Does that mean this is a character change, right? Now, let's be clear. We had a swing high on the board on day 7, right? So like when we cross below the low of this candle, right? Like I'll zoom in. When we cross below the low of this candle on this day, and then we actually made another lower low, even made a lower high, right? This was a little downtrend that started, folks, just to be clear, right? See that? That's a little lower high. That's a slight lower low, another lower high. This is more of a double bottom kind of range situation. And then boom, kind of caught folks off guard, right? Like this little consolidation, really a bull flag. So this spells to me that it could be a character change. Now, though we're already on day 19 and we've seen rallies have been petering out around day 10. You had this one that was a little bit longer at day 16. I would think that we're going to get a pullback soon. And importantly, we're going to want to see if that pullback can hold around the 102 level. Like, think structurally, we wouldn't want to give back too much of this, right? Like maybe we even chop around a little bit like that and then make a move up, right? Versus some kind of sharp thing that goes down to like there, or like, like down here, which tells you, maybe we don't bounce all the way up. We do something like that and then that, right? Like that's what you want to be careful of. But at this point, I certainly wouldn't chase this. Now, you can always it's all about your risk reward, obviously, but we just closed the underside of this gap here. And so, I don't know, maybe we see a move, like this is your next kind of cluster, right? So everything is pointing to that move to 137, but it's just a question of like, do we have enough gas left in the tank, essentially? And so with that, let's switch over to the ratio chart just to kind of get that context. I talked about that briefly. This is your big picture ratio chart, so your quarterly chart. This is Meta on the left-hand side and Meta divided by the S&P 500, right? So going back to its inception, and you can see just to that point, this is your absolute chart, and Meta's rallying for all of these quarters, right? And you can see you have a big rally in the third quarter of 2013, where the price doubles, right? We open at 25 and we close at 50. That was a big quarter. This is your absolute chart, and this is your ratio chart, and you can see, obviously, the S&P doesn't double in a month generally, and so that was a huge month of outperformance for Meta versus the S&P, and ever since that, it's been moving ever higher, right? Now, here's the thing. We topped out, like, that was our high, and that was the third quarter of 2020, and, well, that's interesting, right? So that was almost like your warning sign. So we topped out the third quarter of 2020 on the ratio chart. So basically, the way of thinking about this is the point where Meta stopped outperforming the S&P 500, and it just didn't make sense to own Meta versus the S&P 500 anymore. This kind of chopped around a little bit. I mean, this is where you obviously started your big downdraft, but we didn't make our actual swing high on the absolute chart until the July quarter of 2021. So another way of saying that is we peaked a year early in the ratio chart, right? And then we came back and made this little double top on the ratio chart, and then we really collapsed, right? And of course, Meta had its problems in absolute terms, but that's how it works. That's a good little thing to kind of look at. But notice we're rallying here now. We know that we're rallying in absolute terms. We just talked about that. But we're also rallying versus the S&P. So the S&P has obviously been going up the last several weeks as well, but Meta has been going up by more. Let's zoom into these monthly charts. Right. So it's the same pattern here. The same way we have a little swing low, we have a little swing low on the ratio chart for the S&P versus Meta versus the S&P. So that's going to be important to watch to see. Does this start to roll over before this starts to roll over? And maybe that can give us some hints, right? But it's the same kind of idea. We're on week 5 of a new cycle kind of thing on the ratio chart as well. So this is going to be an important one to watch. I'll continue to watch that. This is your next really significant level. We got to get through that. And I'll actually just add an alert, right? This is a great way to just, keep up to speed when something moves. So you don't have to sit and kind of babysit any charts. So this is going to be a big week coming up for Facebook to see. I expect we're going to get a pullback, if not this week, then next. And we want to see if that pullback can hold a higher low. That's your buy opportunity. And this is obviously going to correlate with the broader markets. In general, rates are coming down. And so, tech is seeing a little bit of a breather. And obviously, Facebook is catching a bid because of that. So we'll leave it at that. That is our Facebook call. So the final verdict is I would say wait for a pullback. Watch if that pullback holds a higher low to potentially get in. We are relatively early in a weekly cycle if we're going to get a bullish cycle. And again, we are starting to outperform the S&P 500 again after a long decline. So we are going to want to watch for signs that begins to deteriorate if and when it does. So we'll leave it at that. Thank you for watching, folks.